Now, it's exactly a week since one of the biggest, supposedly most stable cryptocurrencies took a massive tumble.
Welcome to Watch Mojo, and today we're exploring moments in history when common sense went out the window, prices went through the roof, and the resulting crash left millions of regular people with nothing but empty pockets and broken dreams.
It seems amazing that a business as huge as this can fail in this way.
South Sea Bubble.
In September, when the bubble burst, England was plunged into an economic and political crisis. This was one of the first examples of a financial boom and bust, and was the event that gave rise to the use of the term bubble to describe a spectacular market failure.
In 1711, the South Sea Company was established to assume a portion of Britain's national debt in exchange for exclusive trading rights to Spanish South America. The lure of this supposedly vast, untapped wealth ignited an unprecedented speculative fervor.
It's worth remembering that the South Sea Bubble occurred when the concept of hands-off investing was quite new. The development of the joint stock company in Britain allowed businesses to attract large amounts of capital from investors who could easily sell their shares to someone else if they needed their money back.
The success spawned a proliferation of absurd bubble companies, including one famously described as a company for carrying out an undertaking of great advantage, but nobody to know what it is. Parliament passed the Bubble Act to curb these rival firms, but this ironically drew attention to the South Sea Company's own questionable value. As insiders began to sell, public confidence evaporated, and the price of shares collapsed, leading to widespread bankruptcies and a massive political scandal.
In Britain, the South Sea Company was kept alive but scaled back significantly and kept under stricter government control. It was broken up, with some of its capital being transferred to the Bank of England. The venturing arm was split off too, and they continued to do some trade with South America and even entered the whaling business with little success.
Mississippi Bubble.
I'll open a bank. You've never heard of a bank? Well, here's how it works. It's simple. People who have gold bring it to me. I give them a receipt, a banknote, a piece of paper. But it's just as good as gold.
Following the War of Spanish Succession, France found itself in a dire financial predicament with crippling national debt. Enter John Law, a Scottish economist with a radical solution: replace metallic currency with paper money backed by the wealth of the French colonial territories.
I see the Mississippi River, and that land they named after King Louis, Louisiana. It belongs to France. It's rich in diamonds, gold, furs, rubies, who knows?
In 1717, Law established the Compagnie d'Occident, granting it a monopoly on trade with the vast Louisiana territory. However, the perceived wealth of Louisiana proved largely illusory, and actual profits were meager. As astute investors began to cash out their paper money for gold and silver, public confidence wavered. When the bubble burst, the value of the shares and the paper money they backed evaporated almost overnight.
John Law slipped across the border in disguise, broke and broken-hearted, never to set foot in France again.
Railway Mania.
How soon before it was converted to steel rails for a proper steam railway?
Well, the railways converted in the 1830s. It becomes part of a network and part of the mania that's sweeping Britain throughout the 19th century.
The Industrial Revolution was in full swing, and railways were the undeniable future of transport. This fertile ground for innovation quickly morphed into a speculative frenzy.
Is there any single figure that stands out in this great expansion of the railway?
If you're talking about railways, we have to talk about George Hudson of York. The railway king, as he became styled through the 1840s. And Hudson really came from nowhere.
Thousands of railway companies, some legitimate but many outright fraudulent, sprang up, each promising lucrative routes and unimaginable returns. But the tracks led many straight to ruin. By 1847, the bubble of over-speculation and unrealistic projections began to deflate.
He had his own money, but even so, how could he have afforded this?
It's where a little bit of sharp practice came in, and this was the beginning of Hudson's downfall, really. He was found that he was falsifying accounts, he was selling land that wasn't his to sell.
So, was Hudson a crook?
Yes.
The Bank of England, facing a gold drain and a broader credit crunch, aggressively raised interest rates, reaching 8% by October. This move further squeezed the over-leveraged market. Countless nascent railway companies ran out of funds or were exposed as pure fronts. Shares then plummeted, wiping out entire fortunes in a matter of weeks.
What does the rise and fall of George Hudson and the whole railway mania that you've described. What does that tell us about the Victorians?
What the railway mania tells us is there was an appetite for everywhere to be connected. It's unifying the country in a way that nothing else can do.
The Great Depression.
Men take to the streets, offering themselves and their skills for $1 a week. Suddenly, for millions of Americans, nothing to do, and all day to do it. When all hope of getting a job is gone, eyes are lowered, hands held out, as the unemployed shuffle along and accept a quarter.
The so-called Roaring Twenties were a period of unprecedented optimism in the United States. Speculation ran rampant, with citizens buying stocks on margin, meaning borrowing heavily to finance purchases, convinced that prices would never fall. The illusion shattered over a terrifying week in October, culminating on the 29th, better known as Black Tuesday. Panic selling decimated portfolios, but the real disaster began when the panic spread to the banks.
5,000 banks shut their doors to depositors now in greatest need of their savings. Many would never reopen.
Massive runs broke the system, wiping out the life savings of millions. Unemployment soared to an unprecedented 25% in the U.S., with families facing destitution and homelessness. The Great Depression remains the ultimate warning of what happens when the dream of easy wealth curdles into a nightmare of bread lines and shanty towns.
Private industry joins with relief agencies, such as the Red Cross, to do what they can, filling food baskets and setting up soup kitchens.
Japanese asset price bubble.
Plaza Accord was a kind of agreement which accomplished much more than everybody expected for the meeting. When we went to Plaza meeting, we are quite prepared to see substantial increase in yen's value.
In the late 1980s, Japan was a manufacturing titan. Following the Plaza Accord, the economy was awash with cheap credit, leading to an extravagant binge in real estate and stocks. Land prices in Tokyo soared to unimaginable levels. At one point, the Imperial Palace grounds were rumored to be worth more than the entire state of California.
I felt great about it. I thought it was the East's revenge on Western capitalism. If it comes to it, I thought, we should buy all of the United States. We really should have bought more of America.
The Nikkei 225 stock index reached nearly 39,000 on December 29, 1989. Everything changed for the worse in 1990, when the Bank of Japan jacked up interest rates. The aftermath ushered in Japan's lost decades, a period of prolonged economic stagnation and deflation. Banks were saddled with dud loans, and the bubble's burst led to decades of job insecurity and a decline in Japanese living standards.
This site has soaked up so much money. We worked it out at the time in the bubble years that as a piece of real estate, Japan was worth the whole of the United States 7 times over.
.com bubble.
Every day, America Online is making it easier for people to live, work, and play.
Hey, Dan, ready for the game? I'm just finishing up here with my new kayaking friends.
Kayaking friends on your computer?
Yeah, I just got America Online.
The dawn of the internet promised a new economy where traditional business models no longer applied. Any company with .com in its name could attract enormous investment, regardless of profitability. The peak of this irrational exuberance arrived on March 10, 2000, when the NASDAQ Composite Index reached its zenith.
A year ago, there were hundreds of internet companies being floated here on the NASDAQ, but not now. The rose-tinted spectacles have come off, the emperor's new clothes have been seen through, the lunatics have been put back in the asylum, and the internet bubble, well, it's burst.
Beneath the surface, many internet startups were burning through cash at an alarming rate. The ensuing crash was swift and brutal. Trillions of dollars in market value evaporated, wiping out the fortunes of countless investors. While the ashes of the bubble eventually gave rise to today's tech giants, for many entrepreneurs and investors, the internet bust was a period of total financial devastation.
The internet is not a hallucination at all, and it's not, unfortunately, a panacea that is going to create 400 companies that work. It'll probably create 40. You had a period where money was essentially free, and anybody could raise it. You say, I have an idea, people would throw money at you. In fact, a year ago, your biggest concern was being drowned in the capital and annoying people because you wouldn't let them invest.
Asian financial crisis.
Affection for the Prime Minister is rare in Thailand today, where most regard him as irredeemably incompetent. But even as the Thai economy collapses around him, General Chevalit remains a consummate money politician. His party's been bussing in rural supporters to Bangkok, They get all expenses paid trips to the capital, and in exchange they shower praise on the premier.
The mid-1990s saw the Asian tiger economies celebrated as paragons of rapid growth. Foreign capital poured into Thailand, Indonesia, and South Korea, attracted by high interest rates and booming real estate. However, the success masked underlying fragilities, weak financial regulations, and an over-reliance on short-term foreign loans.
If you don't push forward political reform by the adoption of the new constitution, Thailand would face an impasse politically and economically.
The pinprick came on July 2, 1997, when Thailand ran out of the cash needed to prop up its currency and was forced to devalue the baht. The crisis led to widespread corporate bankruptcies and political upheaval, notably the fall of President Suharto in Indonesia. The International Monetary Fund stepped in with massive bailouts, but these came with harsh austerity measures that exacerbated the suffering of ordinary citizens.
I am very worried. I have no money. I am concerned about my children. My husband used to send me money every month, but lately, nothing at all.
Irish property bubble.
I think if I'd known that the mortgage would actually have increased so much over the year, I don't think I would have actually taken the 100% mortgage out.
We talked to a few of the brokers, and it's just very difficult for them to give you anything that would actually buy you a house anywhere beside work or anything like that.
Fueled by low interest rates and a belief that property prices never fall, Irish property became the ultimate investment. Ordinary citizens were encouraged to take out massive loans to buy homes and investment properties. Construction boomed and banks offered increasingly lax lending criteria, making it easy for almost anyone to get a mortgage they could barely afford.
What's been driving the Irish housing market, particularly over the last few years, has been expectations or sentiment. After all, we've seen interest rate increases in 2006, yet house prices rose by about 12%. How can one justify a big increase in house prices in an environment where interest rates are increasing? It's got to be sentiment. And once sentiment changes, it tends to go downhill very quickly.
The euphoria ended with the 2008 global financial crisis. Property prices plummeted by over 50% in many areas, wiping out billions in equity overnight. Ireland's banking system collapsed, forcing the government to implement massive bailouts that hamstrung the national debt. Thousands of homeowners found themselves in negative equity, leading to widespread repossessions, which skyrocketing unemployment did little to help.
In relation to Pfizer, I understand that 65 people are to be made redundant and that 2 plants are to be sold as going concerns.
So the jobs are gone.
Pfizer workers are reeling tonight after they were told 545 jobs are under threat.
In the early stages of a 25-year mortgage, 3 or 4 years into that, 2 small children, a wife at home.
United States housing bubble.
It's a scene enough to inject fear into any financier, banker, and the odd politician too. Staff from what was America's 4th largest investment banking titan arrive not knowing if their jobs still exist.
In the early 2000s, low interest rates and financial deregulation turned U.S. housing into a guaranteed path to wealth. Lenders offered risky subprime loans to borrowers with poor credit, which were then hidden inside supposedly safe investment packages and sold to investors worldwide. The belief that housing prices would always rise became an article of faith. The market reached its peak in 2006, and as prices began to fall, the house of cards tumbled.
Do you have anything to say about the possible bankruptcy or closing down? Do you have anything to say about the closing or bankruptcy?
Foreclosures shot up and the complex web of mortgage-backed securities unraveled, exposing systemic risk. This culminated in the September 2008 bankruptcy of Lehman Brothers, sending shockwaves through the global economy. The resulting Great Recession led to millions losing their homes, widespread job losses, and a credit crunch that destroyed retirement savings and left a generation scarred.
I was very happy in Lehman, so yeah, I like this company and I'm just disappointed for everybody. I think it was a great company. I'm just, sad.
Before we continue, be sure to subscribe to our channel and ring the bell to get notified about our latest videos. You have the option to be notified for occasional videos or all of them. If you're on your phone, make sure you go into your settings and switch on notifications. Cryptocurrency bubble.
One popular token, Terra Luna, lost 99% of its value from a high of $118 to just 9 cents, spooking investors and sending cryptocurrency markets plummeting. Entire crypto markets now reportedly worth just over $1 trillion, just a third of its value 6 months ago.
What began as a niche interest in blockchain exploded into mainstream consciousness during the COVID-19 pandemic. Cryptocurrency, with its promise of democratized finance, became the new frontier. Bitcoin, Ethereum, and countless altcoins surged in value, and the total crypto market capitalization soared past an astonishing $2.9 trillion by late 2021. The euphoria, however, was built on speculation.
I think the bubble really fell down around mid last year, is when retail dollars, mums and dads and ordinary people looking to get ahead, when they got out of it. And ever since then, it's sort of, the industry's been frantically trying to recruit new customers, doing ads at the Super Bowl and so on.
As central banks began to tighten the belt as a way to combat inflation in 2022, the flow of easy money dried up. The collapse of the Terra Luna ecosystem wiped out billions, followed by the bankruptcies of major platforms like Celsius. The final devastating blow came with the implosion of crypto exchange/hedge fund FTX, which was later revealed in court as a massive orchestrated fraud.
Just moments ago, FTX founder Sam Bankman-Fried was sentenced to 25 years in federal prison. He was found guilty back in November of orchestrating a multi-billion-dollar fraud that led to the collapse of his company. A jury convicted him on all 7 counts of wire fraud as well as conspiracy.
Which economic bubble shocked you the most? Be sure to let us know in the comments below.